U.S. Savings Bonds by www.profitableinvestingtips.com. U.S. savings bonds are often thought of as a poor man's route to savings. Many aggressive investors and traders scoff at the idea of buying U.S. savings bonds every payday and holding them for as long as 30 years. However, there are a number of advantages to buying and holding U.S. savings bonds. As with all investment opportunities, a little fundamental analysis of the subject is useful. So before comparing U.S. savings bonds to dividend stocks, U.S. Treasuries, or municipal bonds, let us look at a few specifics about U.S. savings bonds. U.S. savings bonds. These bonds are available in Series EE and Series 1. Electronic Series EE bonds are purchased via a Treasury Direct account for face value, and paper Series EE bonds are purchased at their face value. One earns a fixed rate of interest for the 30-year term of the bond. The Treasury guarantees that the bonds will double in face value in 20 years. Series 1 bonds sell at face value at interest rates guaranteed to exceed that of inflation. These bonds are not tradable. The maturity periods can vary. For example, if you buy a bond with a value of $50 for $25, you'll have to wait at least 17 years to get back your investment from the government. U.S. savings bonds are exempt from state and local taxes. Federal tax is deferred until the bond is cashed in. Interest may be tax-exempt if you can document that interest was used to pay qualified higher education expenses and provide that your income falls within federal guidelines for this benefit. As with many long-term investments, you will commonly cash in U.S. savings bonds when you are retired and when your tax rate is low. U.S. savings bonds pay interest twice a year and are redeemed at par value at maturity. Savings bonds come in 8 values: $50, $75, $100, $200, $500, $1,000, $5,000, and $10,000. Why purchase U.S. savings bonds? There are certainly lots of investments that can make a lot more money over the years than U.S. savings bonds. And there are lots of investments that can disappear in a puff of smoke during an economic turndown. U.S. savings bonds are like money in the bank. A good rule of thumb for investing is to first pay off credit card debt, invest in your home, and put 6 months of savings away for emergencies. Think of U.S. savings bonds in this context. U.S. savings bonds versus municipal bonds. Like municipal bonds, U.S. savings bonds are free of state and local taxes. Unlike municipal bonds, U.S. savings bonds are less likely to default than when cities like Detroit declare bankruptcy. U.S. savings bonds versus dividend stocks. Dividend stocks are a common way to balance the risk in an aggressive stock portfolio. However, even large cap stocks can fall in price or fall out of favor. When the markets are falling, U.S. savings bonds still maintain their value and pay interest. Buying U.S. savings bonds. Bonds are purchased with a Treasury Direct account. For such an account, you need a Social Security number, a driver's license, a checking or savings account, and an email address. According to the U.S. Treasury site, minimum purchase $25, maximum purchase $30,000 per person per year. Interest 90% of 6-month average of 5-year Treasury security yields added monthly and paid when the bond is cashed. Minimum term of ownership 12 months. Early redemption penalty: forfeit 3 most recent months' interest if cashed before 5 years. For more insights and useful information about investments and investing, visit www.profitableinvestingtips.com.